Chetan, great having you. Thank you so much for taking the time out. And I hope we didn't make you blush when we spoke all of that, but it's actually the truth.
Well, the truth is that I'm not from Gujarat. I'm actually a Punjabi, but that's fine.
No, but what I meant was that you, from where I hail from, which is Ghatkopar, there are a lot of people who apparently know you. They speak very highly of you,
Okay.
and which is the point I was making. Okay.
That's great to hear. Thank you so much.
Not at all. So Chetan, how do you view the current landscape? Simply because it's very, very volatile, and it's difficult to give a call today for something that might change in less than 24 hours, as we've seen overnight with the Iran-Israel possible ceasefire.
Well, that's absolutely correct. And actually, one of the concerns we have or challenges we face in our jobs is that our views could literally change every 2 weeks, and it's not easy to keep up with how the market narrative changes. So, the message I will convey is that I think investors should always have a disciplined risk reward. And what it means is that, let's say you feel that markets are becoming quite exuberant because a lot of positivity is in the price. Maybe look at your portfolio and see where you want to trim or cut risk. At the same time, let's say suddenly you see the narrative is turning quite negative because people are quite cautious or concerned about tariffs or some of these uncertainties. It's probably time to look at portfolios and maybe add risk. So actually our market view is that we think markets will be range bound because we still have a lot of uncertainty on the global front, specifically on the trade front.
Chetan, hi, Tamanna here. I'm very excited to talk to you, especially after Niraj's setup for you. So excited about this conversation. Just want to get a sense from you on how convinced you are on something which is now being called the taco trade. Simply because we're seeing various iterations of it, starting from tariffs to statements on geopolitical warfare in all sense. Is that going to continue to be the next big theme over the 3 to 4 years to come of the Trump administration? Is that now one signal that you've started looking at very seriously? That if he says something, it's likely it will reverse?
Well, you can't assume that if Trump says something, it will likely reverse. As I said, it's a huge function of market pricing, valuations, and positioning. And I'd say the time to be buying stocks was 8th or 9th of April when the Trump administration actually paused tariffs. I think that was the point of peak pessimism, at least from our perspective. Now, as you can see, whether it's India markets or Taiwan markets or Korean markets, even China markets, pretty much even US markets, all these markets have bounced back, and we are now above where we were on just one day before Liberation Day tariffs were announced. So I think markets are already pricing in so-called taco. Just to say that anything Trump says, we should just assume that it may not happen, I think it's a bit of a stretch. I think it's really a function of what's really priced in. And as far as geopolitical developments is concerned, I find it interesting that a couple of days ago, it seemed to me that the Trump administration will probably not get involved directly with Iran, but they did involved directly in Iran, which I think now in hindsight is actually positive news because it essentially means that at least that concern for market should no longer be there because this is almost like end of war.
That's exactly what I mean by the taco trade. On Friday, Trump says we won't do anything for 2 weeks. Then over the weekend, he does. Then we see everything that's happened in the last 12 months. So that's what brings the uncertainty. Having said that, is it overtly optimistic for us here, and because we look at Indian markets day in and day out, to see India as a relative safe haven, Chetan? Far removed, not far removed, but relatively secure from everything that's impacting a large part of global markets.
Well, I think I do agree with that assessment. In fact, this is also our view. I do think that at least on the trade front, India has very less vulnerability to the trade policy outlook as regards US is concerned. India, always the biggest challenge for India equities or Indian economy has always been commodity prices and energy prices. And therefore, what was happening in Iran and Israel over the last, let's say, 72 hours or, a couple of weeks ago was clearly a risk factor. But now that's out of the equation. So we do feel that India looks okay. Of course, stocks just cannot grind higher and continue to go up in a straight line. There will be periods of consolidation, especially when, suddenly for regional investors or global investors, suddenly some other markets start becoming more interesting. So I think what India is right now seeing a little bit period of consolidation because suddenly some opportunities in, let's say, Korea or Taiwan look interesting, but that does not mean that the investment case of India is broken. So we are quite positive, and I do feel that India looks quite well positioned, especially from a trade front.
Chetan, a lot of talk on two particular things. I would want your opinion on what it would mean for, let's say, flows into India. One, if indeed what Jeffrey Gundlach or some others say that the dollar will depreciate, they are looking at non-US assets. Does it mean any which ways money floating into maybe APAC as well, part one? And part two, if indeed Japan were to do something with rates and therefore the impact that it may have on the carry trade or what have you. So how do you see both of these things from a global fund flow event into markets like India?
Yeah, so I think this is again very topical point of discussion with our institutional investors as well. And the thing with US is that US has the world's largest or the deepest markets, whether it's equity market and bond market. So what has happened in the last 10, 15 years since the post GFC environment, that a lot of money has gone to both equities as well as US bonds. Bonds were considered always safety trade. Equities was always again, a huge attraction were the tech companies. So now that because of dollar weakness, because of this policy uncertainty, there is a question whether this US exceptionalism can last. So what is happening now is investors clearly are looking at other areas where some of these portfolio flows could move to. Essentially they're looking to reallocate. And the most important thing in my view as an equity strategist is that markets which have the depth and the breadth, especially equity markets, that's where the money will go. And on that aspect, I do feel once again, India ranks quite highly. And just to give you a couple of data points here, if you look at US market, US market today has, I think, around 1,800 stocks which trade more than 10 million a day. Now, why 10 million? Because that's fairly liquid for most global investors to invest in. If you go to China, which is A-share versus the H-shares, there are around 2,800 stocks, which is more than US, which you can find which trade more than $10 a day. Now, of course, China is unique, as we know, because of other challenges. And then we look at other markets. So Japan has around 400 stocks which trade more than $10. And then you have India around 260 stocks. So actually, if you look at the depth India has to offer, I think it is substantial for investors to look at India. I would also argue that the breadth is also there. These days across themes, you can find any sort of stocks or any sort of themes you want to play in India. So you were just talking about defense. There are obviously defense stocks. If you want payments, there are fintech stocks. If you want like delivery companies, there are delivery companies. So I think that way, I do feel that if there is reallocation of flows, which I feel on the margin is happening, India should be the beneficiary. Of course, subject to valuations, because one issue or challenge always with international investors as far as India is concerned is valuations. So if you get decent points of entry, I think you will probably see some bit of buying also pick up for India equities.
That was the next point I was coming to actually, Chetan, that how do you feel about the valuations picture as of this point? Because India is always seen as expensive, but then surprises on the upwards as well in terms of a longer time trend if you look at it. Currently, do you see enough opportunities where valuations are something which is palatable for you?
See, I think at the index level, again, given the bounce in Indian stocks, and which is also the case, by the way, with other markets, as I said, India is not alone where the bounce has occurred. So I think valuations are now once again trading on the higher side. If you just look at Nomura's house estimates, or let's say target for Nifty, I think we have just 4-5% upside from here until March 2026. But by the way, which is also consistent with our overall Asia ex-Japan views as well. So it's not starkly different. So we were trading on the higher side, but within the market there are always some opportunities. So for example, as a house, we do think that banks, financials is one sector where valuations are more palatable, and at the same time, I'd say that the earnings risk is also less because it's a very domestic focus sector. So there are always some opportunities. In fact, as a house, our view is actually take a very bottom-up view. Overall market may be more expensive, but there are always opportunities across sectors you can find. So there's always opportunities, across markets, and India is not different there.
Chetan, one question on that, and which is this, that with the quantum of paper having come in, plus the market cap market-wide having gone up, maybe the size and the liquidity of the non-Nifty 50 or the non-Nifty 100 stocks have also gone up. Are large global investors now open to investing beyond the top 100 names as well? Is that something that you're seeing?
Yes, I think that's again a fair comment. I haven't done a proper analysis on this, but anecdotally, I do feel, there are, beyond the top 50 or the top 100 stocks. I think our investors do look at the stocks which are in the, let's say, the mid cap territory. So again, this goes back to the point I said earlier, that because there is liquidity in these stocks, because maybe the local investors are active, the local mutual funds are active, it's relatively easier for foreign investors to actually also look at those mid cap stocks. And again, many of these stocks are, in sectors which are emerging. It could be defense, it could be, delivery companies. And areas or sectors which can structurally grow. So I think the short answer is yes. I think investors do look at, and I think I would just say that many investors have actually not fully participated. Foreign investors have not really participated because historically the focus for investors has always been large cap stocks, which, as you know, have actually underperformed, let's say, the small mid cap stocks. In fact, I would also share one more data point, is that if you look at the positioning of global EM investors, let's say top 50, top 55 emerging market funds, they're actually underweight on India. And this is underweight on India is not because they don't like the India story. It's just that they've not been able to fully capture this momentum, or they were probably positioned in large caps sectors or stocks which did not do as well as the overall market.
Interesting. Chetan Seth talking about defense, delivery, mid-caps, very, very constructive on India. Excellent conversation. Thank you so much, Chetan. Hope to have this opportunity again. That's the view coming in from the APAC Equity Strategist at Nomura.